If you're behind on mortgage payments and you've received a foreclosure notice, I know this can feel overwhelming. But the good news is, you have options. My name's Tyler Nemec, and I help homeowners in Florida navigate through difficult situations like this. Let's talk about what you can do right now to take control of your situation. First, let's break down your options. The first option you have is a loan modification. This is where you work with your lender to change the terms of your mortgage to make it more affordable. This could mean reducing your interest rate, extending your loan term, or even rolling missed payments into your balance. If you're experiencing a temporary financial hardship but want to stay in your home, this might be the best solution. Just remember, lenders don't approve every modification request, so you'll need to prove you have the income to afford the new terms. Forbearance is another option, especially if your financial hardship is temporary. With forbearance, your lender agrees to pause or reduce your payments for a set period. However, once the forbearance period ends, you'll need to catch up on the missed payments, either through a repayment plan or a lump sum. This is a great short-term relief strategy, but it's very important to have a plan in place for what happens once that forbearance period ends. If you have equity in your home and your credit isn't too badly affected, you may be able to refinance your mortgage. Refinancing allows you to replace your current loan with a new one that has better terms, possibly a lower interest rate or a longer repayment period, which could lower your monthly payments. Keep in mind that qualifying for a refinance when you're already behind on payments can be tricky, but it's worth looking into if your financial situation is improving. If staying in the home isn't financially feasible, selling your home before foreclosure might be a smart move. By selling, you can pay off the mortgage and potentially walk away with some cash in your pocket if there's equity in the home. Many homeowners choose this route to avoid foreclosure on their credit report, which can significantly impact your future homeownership opportunities. A foreclosure on your credit report can make it nearly impossible to get a new loan for the next 5 to 7 years. If you owe more on your mortgage than your home is worth, a short sale might be an option. This is when your lender agrees to let you sell the home for less than what you owe, forgiving the remaining balance. A short sale can be a complex process, but it's generally less damaging to your credit than a foreclosure. Plus, it allows you to have more control over the sale rather than having the bank take over. If selling isn't possible and a foreclosure seems inevitable, you may consider a deed in lieu of foreclosure. This is when you voluntarily transfer ownership of the home to the lender in exchange for being released from the mortgage debt. While it does impact your credit, it's often seen as a less severe alternative to foreclosure, and some lenders may even offer relocation assistance. Filing for bankruptcy is another option, but it should be a last resort. Chapter 13 bankruptcy can help restructure your debt and allow you to catch up on missed payments over time. Chapter 7 bankruptcy, on the other hand, could wipe out certain debts, but it may also mean losing your home. Bankruptcy has long-term consequences on your credit and financial future, so it's critical to consult a legal professional before considering this route. Now that you know your options, your next step is taking action. I know that every situation is unique and choosing the right path can be stressful. That's where I come in. I'd love to help you understand your options and find which solution is best for you. If you're facing foreclosure, don't wait. Time is critical. Give me a call or send me a message and let's talk about how we can keep you in control of your financial future. You can also check out my other helpful videos explaining the foreclosure process.